Morning all, how we doing? Morning Diamond, morning Fabio. I was just watching this gap fill on the DAX this morning. Excuse me. We've got a potential move down on the cards this morning. Where are we? So, yeah, every gap fill so far this week has been pretty quick. We've got that one there, straight down filled. That one there, straight up and filled. Didn't get one that day. Right, yeah, we didn't get the gap fill yesterday, so that was the one that didn't get filled. It looked like they were coming up to do it. It's debatable whether or not that's close enough there. And then we've got this one here. But we had the down day yesterday that I was expecting. I somehow managed to lose $1,200 yesterday, trading in the direction I was expecting the market to go in. Go figure. But yeah, so potential gap fill on the cards this morning, but obviously just bear in mind we haven't done this one yet. So there's a move potentially up to 13,218 for the DAX, or potentially down to 13,086. So flip a coin time. But yeah, just keep an eye on that this morning. I've just taken a short on futures this morning to see if we can get this done fairly quick. It's worth a bang. Morning Neo. So yesterday banked 1.5%. Big day yesterday. Everything started to move at last. So I'll just quickly run through what I banked yesterday. I banked some Aussie CAD this morning, which was a position from Monday. We didn't go anywhere yesterday. This morning the Aussie news CPI figures came out lower than expected, which is interesting. They don't seem to be getting inflation going up, which is weird. But yeah, so I banked that one yesterday, this morning rather, during Asia while I was asleep. And it's just pulled back a little bit. I'd love to see it get back up to there really, just to give us some confirmation of a move down. But yeah, if we can break the lows, I'll be happy as well. So that started moving. Yesterday, US dollar CAD, that's just the one on that. Let me move this down so I know where I am. 26. So yeah, one position. So this was a slightly more aggressive position. It was a 0.33 instead of a 0.23. I had the idea of doing a bit of drawdown control. We had this lovely 3-bar reversal. We had a reversal alert on that candle which pushed above the highs. So I jumped in, really good easy trade. Took it off pretty much at the highs of yesterday. Excuse me. But it's come back down again this morning. Looks like it's starting to push up. I didn't do any drawdown control with it though, because yesterday nothing was really dangerously in drawdown, so I didn't bother. So just a nice profit. New Zealand dollar Swiss, got out of it, fed up, had enough. Things drive me up the wall. It's not going anywhere. So got out of that one yesterday. My target was down here. It came down here and spiked my TP and then pulled back. And it didn't take me out, but eventually it came back down again and closed it. So I probably would have hit TP on it, but it was that one there and this one back from last week. But you know, that's why I got out of it. It's just not going anywhere. I can't be bothered. Got New Zealand dollar and Swiss franc exposure tied up in something that's not moving. It's not worth doing. Pound US dollar, had 3 positions closed on that one yesterday. Yeah. I didn't realise I closed 3 on it yesterday. These were all trades from Monday, so I had a couple that were a bit too close together. So I closed that one and the one that was a bit too close out together, and then the other one closed out back down at the lows, which was the TP. These all hit TP basically. You can see the TP on all of these positions. That was TP hit, that was a TP hit. This is a low. That's why I got out of that one there, because I was expecting a bounce, which we've got. So this morning today I'm looking for this to continue to drop. So I've got a couple of extra positions on that as well. So looking okay. Oil got out of one. Which was from last Thursday. Yeah, that one there. So this stupid trend line won't break. It will break. You can see obviously we've got a peak formation pushed up to new high, new higher low. We're contracting into a symmetrical triangle, which we all know explodes. Technically this is a bearish symmetrical triangle because the move is down, but based on where we are from a support level pre-Ukraine crisis pricing at 95 a barrel, I'm expecting this to break to the upside, and I'm expecting the break to be fairly aggressive. So I would look for this high to get taken out. I'd look for an ADR hit on this today, and then a further ADR hit probably tomorrow on it. It may go off of FOMC this evening, don't know, but I've got another position which I've just taken on that one, and that's the position from somewhere back here. But yeah, like it, long still in it, going well, milked it, completely milked it. It's just taken profit after profit after profit after profit after profit, and just keep adding on, taking it off, adding on, taking it off, and eventually it's going to go, and then I'll wait for pullbacks to add on. But yeah, so that's good. So that's everything I closed out yesterday. Good day. Current exposure is Aussie CAD. Got 1, 2, 3, 4 on this one. One of them's a half position, which I've done drawdown control on. Waiting for the Canadian dollar strength to come in, or Aussie dollar weakness. And now we've got Aussie dollar weakness off of the CPI figures lower than expected. We've got the reversal alert, breaking structure. We have bounced off of these lows, so I want to see this low of Asia get broken today, and make some headway into ADR. But it's starting to move. I've also got pound US dollar short, again just waiting for some US dollar strength, which will hope. We've still got, obviously it started yesterday, the US dollar strength. So we had that lovely M pattern reversal yesterday. We were in the pullback before the next leg down. Need yesterday's low to get broken, and sort of an ADR hit today ideally on that one as well. US dollar CAD, just waiting for the US dollar CAD to power up, just waiting on the US dollar basically. So FOMC hopefully will be the catalyst today. So looking for a new leg up on that one. We've just taken the liquidity there. There is this other level down here, just below yesterday's low. So potentially there might be another position there. And again, same as yesterday. If we come down, let me just show that level quickly. So it's this level here. Yeah. I don't think there's a lot of liquidity under there, to be honest. I would imagine most people will have got out up there, but the speculators who are running on the 4-hour and daily charts, they could potentially still be in there. Could be some liquidity under there. So today, it'll be the same play as yesterday. If they come down and take the liquidity from yesterday, so there's liquidity sitting under here from back there. There's liquidity sitting under here from everybody that longed like me yesterday. So if they come down and take this liquidity, quite possibly in FOMC, I will enter another position and go long. So that's the plan for today. They may well come down and do it pre-FOMC. If they do it pre-FOMC, spot on, because it leaves it open for runs to the upside then. So that's what I've got on. And oil, obviously. A couple of oils, just waiting on everything. Story of my life. So yeah, so I've got nice exposure on at the minute. Quite happy with that. 2% banked this month, so this week so far. I'm not here next week, by the way. I forgot to say. I'm off on holiday next week for a week. So I will not be here. I'll put a note up on the website and in the Telegram group, but I'm back week after, Monday after. So yeah, I'm trying to get to a 20% month. It's going to be pretty tough because I've only got 3 days to try and find 3.5%, which is a big ask. That's going to be like a 5% week, which is a big week. But we have got FOMC. So if we manage to get a massive spike off the US dollar this evening, I'm going to make sure my TPs are positioned on my US dollar positions far enough away to try and grab me 3.5%, because it'd be lovely to have a 20% month. I haven't had a 20% month for a while. And especially during the summer months. Lovely. But we'll see. Diamond, I hate it you lost money, but I always love hearing that even an experienced trader can have a bad day. Makes me feel less like an idiot. Yeah, it's just a numbers game at the end of the day. I knew the thing that annoyed me about yesterday, I think the thing that got me yesterday was the bias. The bias yesterday, that's the wrong chart. Let me just get this one up. So yesterday's bias, remember I said yesterday, I'm looking for a down day because, come on, work. We had these two nice big P-shaped profiles, and then we started to contract a little bit. Then we went into a double distribution day twice. Double distribution days, which is where you get two capital B's basically, but you get two distributions, two footprints basically, volume profiles. Is usually a sign that the market is starting to turn. And then we had this beautiful inside bar session. That was my clue that, right, we're rolling, we're going to start to drop. So my bias on the day was short. Somehow in here, I just got chopped up yesterday afternoon trying to short it. It's just, I think it was just the volatility that got me yesterday. The movement was very, very choppy. And I was just getting in at just the wrong spots. So I was kind of getting in here with a stop up here, and it would just come up and take me out, and then it would do what I wanted. Then I would get in on the break, it would come down and it would bounce back, and I wasn't taking much profit. So I just got my entries ever so slightly wrong all day. And I basically, I didn't make a profit. I think I was up yesterday. Was I up? I don't think I was, to be honest. So I had 2 losing trades in the Globex session in the morning, which started me off at 450 loss. But yeah, I was basically just hovering around a little bit of loss to break even to a little bit of loss to break even, and eventually I ended up 1,100 quid or $1,200 down, and I just went, nah, bad enough, and I walked away. Just couldn't, for some reason. You have these days where you just, it's like Mark Douglas says, trading in the zone. You're in, you're out, you're in, you're out. You just get in with the rhythm of the market, and it just goes. And there's other days where you just can't seem to see it clearly. Every time the sellers were stepping in hard, I was hitting the sell button. Tick strike was going crazy to the downside. Then it would spike up 16 ticks, take me out, and then plummet. Just the market was just very wide yesterday. So yeah. But anyway, you get them. Pain in the backside when you do, but just got to get the trick. The trick is keeping in control. Basically, it's very easy to send you full tilt, and you just go, screw you, market. 5 contracts short, and that's when it all goes really wrong. Because then that 5 contracts short is a loser, and then you're $1,800 down, and then you get cross, and it spirals from there. You just have to take them. Remember, I always say, whenever I'm having a losing day, whether it be in Forex or in futures or whatever it is, I always remind myself that these days are coming. Yeah, we have lots of these. We have lots of these days. When we get these little days or these losing days, I'm very lucky this month. I haven't had a losing day, I don't think. But when we get these losing days, these ones are around the corner. And I have $1,000 down day, a $2,000 down day, then I have a $4,000 up day, and I'm like, well, no problem, I just made $1,000 net. You just got to remind yourself every time you are losing that the next trade is going to be a runner. and it's going to completely wipe out those losses. Just remind yourself constantly every time you're having a bad one. That's what's around the corner. And you've got to get on it as well. Don't stop trading or reduce your contract size or lot size because you're having a bad day. Because as soon as you do that, you're reducing the possibility of getting your money back. Morning Stevie, morning Alan. I was in profit but not nearly enough considering that I was taking it short. Yeah, it was a hard day yesterday. It's just one of those days. Which brings me on to why it was one of those days yesterday. We were waiting on earnings reports. So you probably saw the spike yesterday evening in the S&P down here. So this was where Microsoft earnings were released. I think it was, yeah, it was that one, wasn't it? So Microsoft earnings were released. I think it was this one actually. Candle pushed up, pulled back, big spike up and down, and then a big rally candle. So we undid quite a lot of the S&P losses yesterday, just on Microsoft. So it's earnings week. Today is the biggest day of the month, of the quarter, for earnings. So today's a biggie. So we had Microsoft come out last night. We had Google overnight. We've had Visa as well come out overnight. So those are the the aftermarket figures. Except Microsoft peaked early. They went at 9 o'clock or 9:03 instead of aftermarket, which is after 3:15, which is when they should have done it, and they didn't. So they came out early. But we've had ADP, Boeing, CME, Shopify, Spotify, Etsy. Etsy's aftermarket. Sorry. So that we've had all of these pre-market. So tech stocks. Actually, it's not tech stocks. It's mainly going to be Dow and a little bit of Nasdaq in there. But we've got Etsy, Ford, Facebook. Qualcomm to a certain extent as well. So aftermarkets. So this is the big day, and then tomorrow we've got Apple and Intel and Roku and Amazon. So and they're all aftermarkets. So the impact of those will be Friday. So when you see these pre-markets affect New York Open, aftermarkets affect Globex and New York Open. Pre-markets affect New York Open, affects Globex. So these will all be affecting tomorrow morning's price action. So today's price action will be based off of what happened kind of last night and all of this lot. And by the looks of things, we're 10 minutes in, the market's not actually going anywhere at the moment. So nothing particularly exciting. But yeah, just keep your eyes peeled for those. If you've got financial juice, the big ones will be released on here. So you'll see when they come out. Nothing overnight apart from CPIs on the Aussie. Today's news obviously is FOMC. So we've had the Aussie dollar. So interestingly, their CPI figures were down. So yeah, doing well, Aussie. Good job. US dollar, core durables, we got 130 this afternoon, and with pending home sales after market. But I think we're going to get a fairly contracted. Well, we might get a big day because we've had a lot of stock earnings reports. But we might have quite a slow New York, and we might have quite a slow London today because we are waiting for FOMC, and it's a big one. It's a 0.75 increase forecast. If they come out anything higher, I don't think they'll put a percent on. The Fed's not known for percentages, so I'd be very surprised if we got a percent on. We're normally talking quarters. 25 basis points to 50 basis points. We're going 75 basis points for the first time. So we went 75 basis points last time, but we were forecast 50. This time we're actually forecasting 75. If we go 100, that'd be a biggie. That'll be a big biggie. We'll see a 200-300% on ADR on US dollar, I would imagine. But I'm expecting positive move off of this. But again, it's FOMC. FOMC is notorious for doing absolutely nothing or doing something completely crazy. It all depends where the market's positioned and how much it's factored in a move. And looking at the US dollar, there isn't a lot factored in at the moment because we've been in decline. So as you can see, we're kind of stable against the CAD. We've dropped. We've sat there now for 4 or 5 days. US dollar Swissy, we've kind of been in decline on. US dollar yen, holding and in decline on for the last sort of week or so. So I'm not sure the market's really factored in much more than what is expected. So if we get an unexpected result, I think we're going to get a big move. So it could be a good one. Now I'm obviously US dollar long twice, so I'm fingers crossed for a decent reaction off the US dollar this evening. ADRs, nothing today. Nothing's hit weeklies yet. We're on Wednesday, so keep your eyes on the weeklies. We tend to get some extensions starting. If they're going to be FOMC based, obviously it's not going to be until this evening. Hourlies, we've only got Euro Pound. Euro got smashed yesterday. So another big down day on the Euro yesterday across the board. Not happy. They are not happy with the rates. So I'm bearish Euro. I just can't find a way in on the Euro. So, but Euro Pound extended to the downside. I wouldn't be interested really in taking it along on it. It's got some nice targets to the upside to go for. We've got this nice level of potential resistance there. But I don't want to long the Euro. I'm completely back to where I was before the Euro rate announcement. Short. The market's short. The market's not impressed with the 0.5 increase. It's just not impressed at all, as you can see. So shorting everything Euro. That's the only thing extended on the hourlies. Euro Swiss and Euro Pound obviously extended to the downside on the 4 hours as well. Not interested in those either. Yes, you probably get a bounce and you're looking for probably no more than that. I'm loath to take a short there. We had some decent power on the Swiss franc yesterday, which is what obviously why I got out of the New Zealand dollar Swiss. So the Swissy came to life yesterday, which was nice to see finally. But that's where I would be looking to scale into a short on the Euro Swiss. I would prefer it to be a little bit deeper, to be honest. I don't like taking small pullbacks. I like to see something stretched and extended that I know is probably going to snap quicker. But as a trend play, anything above 60 on the hourly RSI I think is probably okay for a trend pullback. Sort of up this sort of area. So if we can get up sort of around there on any of the Euro pairs. So just watching this dash, if any Euros light up red, ready to go short. On the hourly, that is not the 4 hourly. So yeah, nothing extended anywhere. I'm not going to go through all the pairs again because I went through them all yesterday and I went through them all Monday. Is there anything anybody particularly wants to have a look at? God, this market's dead this morning. DAX is coming down nicely. S&P's stuck sideways. I'll have a look at the indices in a sec. But the S&P's out of sync with the DAX this morning. DAX gap fill's going well. Anybody on this? So I've got divergence on the US indices at the minute. They're not dropping. But the DAX is. We're still pretty bearish though, I'd say. We've got good wicks to the upside on them. So looking good. I'm short on futures basically. I got a bit of a home run trade going on today on these. I'm looking basically to get back down here. So I've got one short on now. I've got another short on that break, and I've got another short on that break. So I'm going to go 3 positions short with the TP down at the gap fill 39.34. That's the only play I'm doing this morning. Morning, Sammy. Housing market drop. I've no idea. Hope not. I'm just about to buy another one. Well, not really. I'm about to buy a beach hut. 35 grand though. Not cheap. Isn't exactly Forex. Yeah, I've no idea. Housing market, no idea. It wouldn't surprise me. As everybody's pockets get squeezed, the first thing to go is your house. When you get, basically it's like getting into negative equity, isn't it? It's like when you are earning 3 grand a month and all of a sudden your mortgage and your bills jump up to 3,200 a month. There's only so long you can survive on a credit card before you have to go, no, got to sell the house. And as soon as the housing market is flooded with stock, house prices will drop because of the supply and demand. There'll be way more supply than there is demand because nobody can afford to buy a new house. Therefore the housing bubble bursts and it all collapses. And that will tend to be an after effect of CPI inflation increasing and cost of living increasing, and those are all forecasted to continue to rise. So yes, but housing market drop is just part of a recession, which obviously America and a lot of places are saying, yeah, we're not going to get one. Yes, we are. Living in cloud cuckoo land. If we're not going to get a recession, why the hell are you putting your rates up by 0.75%? It's like, we're not stupid. Well, I guess I'll call it naive. Most American people are probably naive about the economics and what is going on, but yeah, I would not be surprised. Now is not the best time to be buying a house. Nothing like buying your first home and immediately crashing 100 grand into negative equity on it. Morning, Themba. So looking at the indices yesterday, obviously at the moment you've got to take any analysis, technical analysis, with a little bit of a pinch of salt on all of the US indices, because it's earnings fortnight. You've got a lot of diversity happening across all of the indices. So we'll see things like the Dow pushing up, the S&P sideways, and the Nasdaq pushing down at the same time. Typically they will all be in sync, but obviously if you've got large tech stocks like Apple coming out with positive figures and you've got someone like Boeing coming out with negative figures, you're going to have completely different directions on each individual index, because each index is measuring a different type of stock. So from a technical analysis point of view at the moment, it's very difficult, and you've got to kind of just go with the flow. So when the market opens, if you see the market tanking, you're probably better off running with the tanking. Don't question why it's tanking or where it's going, just get on board, because the market is going to go where the market wants to based on portfolio purchasing of stocks. So when the earnings fortnight is over, they'll all sort of run back into sync again. But we are turning very, very nicely. This is what I was talking about on the volume profile a minute ago. We had this nice couple of days where we had a nice good push up. Then we started putting in a double. Actually, that was the double there. And then we had that very small move and rotation down. So that was a double distribution, sorry. That one and that one. And then that was the rotational day. And then we started our downward move. So technical analysis would say that we are looking for shorts. We took out the lows and we put in 3 lower highs. So we are rolling over. At the moment we're pushing up at the open for Globex, for Frankfurt, but I'd be looking for down day technically, but it all depends what's happened with earnings, and whether they've been waiting to buy specific stocks that have got earnings coming out, and whether or not those earnings are positive or negative. So you've just got to run with it at the moment. S&P's running higher. DAX is pushing lower. Nasdaq's kind of sitting where it is. Yeah, all US stocks seem to be pushing a little bit higher on the earnings, but the earnings we had come out yesterday weren't particularly positive. They were just as expected, and it's the same thing with stock earnings as it is with fundamental news releases. you've got a forecast. So you've got estimates on earnings, etc., profit. If it comes out roughly as expected, that you would expect that stock to continue. So if a stock's been rising and the earnings come out roughly as expected, it will continue to rise. If the stock earnings come out way lower than expected, people will sell that stock, which will bring the index down. But don't forget, every time somebody sells a stock, there is somebody buying it. Stock market is a zero-sum game. For every buyer, there has to be a seller. There is nothing left at the end of it. So the stock is still there. It's just the stock will devalue as more people want to sell. Price will get driven down because they will tick down. So they'll be hitting the bid, and it will just keep going and going and going until we get to a point where everyone goes, I'm out of my stocks in Google now, and everyone goes, wow, Google's cheap. And the cycle repeats itself. So it's very difficult to read these. I've never been very good at reading stock estimates because you're talking about such massive figures here. What's the difference between a 7.3 and a 7.09 billion as far as the market's concerned? I haven't got a clue. To me, it's an extortionately large amount of money. Whether or not 0.27 billion is worrying to the market, I don't know. And to be honest, I don't care. Just jump on board with what it's doing. But you have to be very careful with forming a bias. So at the moment, obviously, we seem to be very, very sideways on the Dow. I'm just about to get stopped out on my futures short. We're just about to take out the high of the session on the ES. We have just taken out the high of the session on the ES. So I've stopped out on those shorts. Brilliant, another $340 loss to start the day with. It's only $340. So yeah, so we're pushing up at the moment. So, you know, technically really probably looking for longs this morning. But still keep levels in mind. More taking out levels and then pulling back down below them for short opportunities, I think, at the moment. So the markets are generally short. Obviously, you can see there's a massive divergence with the NASDAQ compared to the other stocks, which quite often there is because NAS moves a lot faster. But NAS has already started its rollover. And we have broken back down below this low, but we've gapped up massively this morning. So hence me playing the gap short this morning. NASDAQ hasn't taken out the high yet. So I'm just going to eyeball this and just see if we get some kind of reaction like that. I would probably jump in again with a stop above the high and take a second stab at this short. But if I get stopped out twice on it, the thing's going. I'm not really interested in trading Globex any more than that. 40% of all US dollar was made during COVID. 40% of all US dollar was made during COVID. Extreme inflation should be upcoming. Yeah, well, yeah, we know that. Yeah, inflation is obviously hitting the world big style, and the US dollar leads the way. So the worse it gets in the US, the worse it's going to get everywhere else. So if they keep saying there's not going to be a recession, I just can't see it. The way this economy is at the minute, the way the world is, it's just not going to happen, is it? Not going to escape it without paying for it in some way. So yeah, so that's all I'm doing this morning, just managing those positions. Oil's not really going anywhere at the moment. What did Bitcoin do yesterday? Another down day. Not good. Gold didn't go anywhere either. So yeah, so I mean, just basically waiting for FOMC at the moment. There's nothing else to really look at. Everything started to sort of play out yesterday. We got positive movement in the direction that I'm looking for on all the pairs that I'm trading. So any of the ones that I've recommended this week, or sort of said I would be interested in getting into this week, they've all kind of started to play out a little bit, but as you can see, we're not absolutely flying anywhere with anything at the minute. Swissy yen's doing well because the Swissy had a lovely day yesterday. Nice big up day on the Swiss, which was good. Just taking out the highs there and putting back. Yeah, and I've watched these euros for shorts, specifically euro US dollar. If we get that push on the US dollar this evening, we should get a very good drop on the euro. But keep an eye on what happens with this today. If it pushes today, back up into yeah, this propulsion gap's in a good spot. Look, if it pushes back up into there today, that might be an interesting place to start a little short position for euro US dollar. But I haven't really got anything else for you this morning. As I said, I've gone through every pair this week on Monday and on Tuesday. I'm not going to go through them all again because there's very little changed as far as I'm concerned. We're waiting for FOMC, and I think until we get this out the way, the market's not really going to start to move particularly aggressively. So it's just a case of waiting for that, really. We've got GDP tomorrow as well. But apart from that, I haven't really got anything else for you, apart from managing the positions that I'm in. Did anybody get into anything new yesterday of interest? If there's anything you want me to look at, I'm more than happy. But as I say, for the moment, I haven't really got a lot to look at. I mean, how many market profiles have I got open here? I've got two market profiles basically now. This is both sessions. So this is Globex and New York. Globex, New York. No, sorry, this is the New York one. It's the other one, which is the Globex New York. This one's both sessions. So this is actually the live one. Is it? Oh God. I've shut the wrong chart. New York only. CME, yeah, sorry, this is Globex and New York. Oh, Windows, I hate Windows. Why? I don't, all I want to do is put this at the top. I don't want you to extend it the entire height of my desktop. Stop asking. If I do it a couple of times and then I don't let you do it, you should really be intelligent enough to go, actually, no, he probably doesn't want to do that. Obviously not. What about coming back on for FOMC? I'm not here for FOMC. I have a spin class while FOMC's on. So I'm unfortunately never around for it most of the time. Morning, Trevor. Vink, you want to have a look at pound CAD? So yeah, actually what I will do is show you where I'm putting my TPs for the US dollar pairs. Yeah, pound CAD I like as a short. it's pulled back fairly nicely yesterday. I mean, if you look at it, really, we're not going anywhere. We're up above the sort of 50% line in the range at the moment. So this is an area I would like to be looking for shorts. But it's the CAD that's letting us down at the minute on this one. But I do like this as a short. It's just not extended anywhere. You know, at the moment we are literally just flatlined. But lower lows, lower highs. You know, it's working nicely from a market structure perspective. That's kind of a double bottom really, but lower high. So yeah, I really like it from where it is now. I've got some pound and some CAD on, so I'm not really interested in it from my portfolio perspective. But had a fairly nice reversal yesterday, nice M pattern reversal. We came up and retested it. Yeah, it's working well. It's whether or not we are going to get stuck and find some buyers in here to push it up or not. So it's difficult to know. We have just tested this area on the hourly, so I think we're probably okay to short it. Morning, Kennelly. So with my US dollar pairs, Aussie dollar, US dollar. Sorry, no, Aussie dollar CAD. So pound US dollar. Pound US dollar. So TPs on this. So I would take one off at yesterday's low. I've got another position there which I will go for that 125 extension, and then if it goes completely crazy, you never know, this is the US dollar, we go for a big run down to the lows there. I will take the other two positions off at those lows. So, you know, FOMC, if it comes out as a crazy FOMC, it's not unknown for it to do a couple of 100% with either a spike or with a strong move. So if it's a fairly light one and we get some movement, we should come down and test yesterday's low if we haven't already by the end of today. Then we've got last week's low here, and there's a bit there, so I would come and test that or that, and this is the ultimate target for strength on the US. So those TPs are set up so I can basically go off to my spin class, not worry about it. If the US dollar goes crazy, I'm going to TP on stuff. If the US dollar goes the other way for any reason, the EA will get me in when we've pushed up on any pullbacks. The US dollar CAD, I've got this position here coming off, as you can see there, which is I'm just going to move it down a little bit, which is Monday's high, and that is also this potential resistance area here. So we double hit that, came back down, we came up and retested that area, so we know that is a strong resistance. It's already held once, so potentially we could double top that if it's not particularly strong news. If it is particularly strong news, obviously we'd expect US dollar to stretch out to the highs. So I've got this position here, which I would be looking for probably yeah, I mean, I would be looking for it to come up and retest this area here, so I'd probably take the whole rest of this off up here, take the lot off there. So mediocre move to the upside, strong move to the upside eventually. I mean, I may not hit here off of FOMC, unlikely, but if we do get a strong move, that is where I would expect us to come up and challenge that area there. So that's what I'm going to do with my TPs on the US. News, oil, I haven't got TPs on my oils. I'll take one off and a challenge of yesterday's high, and then I've got another one obviously up there, which doesn't really matter where I put it really. I mean, I'm expecting it to push up to 125, 130 a barrel, moving on to 150 next year, so somewhere up the top. I trade indices based on volume profile, and I trade intraday swings. Can you show how you could use Jigsaw for this type of trade? I.e. today's SP level for me would be 39.35 without FOMC. 39.35. So yeah, basically you can see we've got an area of interest down here on Jigsaw anyway. So we've got 39.33, which is weird level. I'm not quite sure why there's interest down there, but it's just above that step in the volume profile. So that's point of control from yesterday's New York session, 39.26, which is all the way down there. Don't know. So if you're going to swing, it depends whether or not I mean, first of all, it depends when you're trading. So, I mean, I don't get involved in Globex. A lot of people do get. I do get involved in Globex. I'm looking for a short entry now. We have got a fairly decent amount of selling coming in. That's set to a 50-100, isn't it? I need that set lower. 10.30. So if you're going to swing, you need to basically pick as to whether you are targeting a move or whether you're looking to swing from a move. So it really depends on how if you're the type of person that's going to wait for a move or not. But with volume profile, the TPO I find is the best thing to use. So if you've got a short bias today, sell the highs of the TPO when we get outside of value area. So this is the value area at the moment. So just basically selling outside of value area to start a position off. And what a lot of swing traders do is they scale into their positions. So would look at going with a short, probably if we broke down to there, somewhere like that, with my short bias. So we got this big step here. So as soon as we get over this step, it's showing that we've got a decent amount of bearish movement because obviously there's a lot of volume here. We haven't traded below that sort of area. So I'd look to start an initial position there with a stop above the high. And what you're basically trying to do is catch the high to start a position short. And then when you've pushed down, I would look at entering another short down around about the point of control. And that will bring your average in to around about there. And then you would look to just keep adding to the position as it went down and adding to your swing until you've got to where you want to be from a profit perspective. Selling breakouts of the lows. So put one in there, put another one in somewhere around there, probably below that point of control so that we've got over, what the hell? So we've got over this volume node, and then that's what I'm doing. I'm moving my mouse wheel while it's on that. It's moving the size. And then I'd take another one on. Actually, I'd probably take my third down here. Yeah, on that step down. So this is value area low. Value area high and value area low are obviously going to change as the day goes on, but as long as we're within the sort of main portion of the volume profile there, it was not going to change a lot. You might find it move a couple of ticks up or down, probably up, obviously. And then if that's your target, do that. But by far the easiest way to trade intraday, I find, is using the TPO to enter when we get outside of value. So yesterday was a bit of a tricky, you can't really tell from the chart because obviously the value area high and the value area low changes. But as we draw the initial balance in, anytime you push outside of value area high, short it. And every time you push outside of value area low, long it. And as long as we are going in some kind of rotation on the day, which we had yesterday, so we opened with the initial balance, we pushed down, tested that initial balance low, had a little bit of a small one, we pushed up outside and then pulled back down, pushed down, then pushed back up, pushed down, then pushed back up. And as long as you are rotating outside of the value area, you will usually come back in. What price wants to do is find balance, and this is what the volume profile and the TPO is showing you, where the balance is. The point of control is there. This is where the vast majority of people are wanting to trade. Yeah. So the vast majority of people, let's take this day as an example. There's your point of control. That's where the vast majority of people were happy to conduct business. So don't forget, we're buying and selling shares on an index here. So everybody wants to do business here. So as you get outside and further away, and this is 70% away from the point of control, as you get outside to these extremes, everyone's like, well, I don't want to do business up here. I want to do business down there. So price gets dragged down. Every time you get out of here, price gets dragged up. This is a beautiful rotation day. So we move outside of point of control, outside of value area, down to here, buy it. Move back up, get out. Move outside of the value area, sell it. Get out. Move back up, sell, get out. Move back up, sell, get out. Move back up, sell, get out. Move down, buy, get out. Every time it returns back to the point of control. This works with the open as well in New York. The open of New York is quite often a point that will come up and get retested, and if it does, it's usually a good selling point as well, or buying point, depending whether it's moved up or down from it. But obviously you can see it as, so today, at the moment, I'm interested right now where we are in a short, because we're up above the value area high. Point of control for the TPO and for the volume profile are both down there. So I would expect us to come down and try and trade back inside that area. So right now, looking for sells up here. But if you are, if you've got an area that you are looking to be support, which was the 39.34 level, somewhere around there. You know, it's just a case of looking at when we are pulling outside of value areas to get in, and then using the volume profile as we are at the, oh, for God's sake, pen, what the hell? Choose a different colour as well, shouldn't I? Because you can't see that properly. So we've got a volume cluster there and a thin area, and then we've got a big bit there, move down. So let's say we push down into this area here. What I would then look for is just to pull back up into this volume and then come back down to confirm another position. So get in, push down, pull back, start to move short, add another position. Push down, this is where we're going to hit the next hurdle. Yeah, try to get into another position. And play it all the way down to your area that you're looking to get to. But I wouldn't use that level personally, 39.33 or whatever. What I would do is move more up to there. which is the value area high from yesterday. And you can see we've already tested it. So let me just get rid of the line. This is yesterday's value area high and yesterday's value area low. Also, this coincides with the TPO's value area low, and that's the TPO value area high. You can see this morning on the initial balance, well, we opened up actually at value area. Actually, yeah, we haven't tested it yet. So we've basically opened a value area high and we've pushed up from value area high. But look where we stopped this morning, or where we are now. Value area high from the previous New York session. Yeah, so this is an area where everyone was like, we don't want to trade up here, we want to trade down here. And then they said we want to trade lower, and we're coming up and we're trying to trade back above an area we know we didn't want to trade at before. So the market's stalling. We're stopping up here. If we break above this area, obviously then we'd be looking, right, where are we headed? Probably for another value area or a point of control from a previous day where we know we had the vast majority of business conducted, which would be those levels there. These are what are called naked extensions. So if you've got, so you see these ones here, that one there, and that one there, that one there, they do not extend across the chart because they've been tested and rejected. So the naked lines are areas that we know are important because these are areas we wanted to conduct a lot of business at. Yeah. And they have not been tested yet. So they act as potential resistance areas. So if we push up to here today, we're going to be well out of the value area for the day. So we're at a point where we are going into what we call price discovery, and we would expect then to build a rotation there. And then you decide whether or not you want to become a buyer or a seller based on what everybody else is doing from a volume perspective. And then you would sell back down into the value area for today. Value area high and value area low are incredibly important. It builds throughout the day, but you can see these are the tails. These are price discovery, and what you're going to get is you are either going to get every day. Why can't I contract? I can't contract that for some reason. It's not shutting. Why has that exploded? There we go. So yeah, you're either going to get one of two type of days. Really, you're going to get what we call a rotation day. Yeah, which is where basically we just rotate up and down around the point of control. So these are super simple to trade. Every time you get outside of value area, you start to sell it, and every time you get outside of value area, you start to buy it. The problem is you don't know whether today is going to become a trend day or a rotation day until the day has started and it's underway. That's a trend session. That's a trend session. That's a trend session. Yeah, this is a double distribution session. So we had an area of balance, we had an area of imbalance, and then we had another area of balance. We had an area of imbalance which was rejected, and we came back up into area of balance again. And you can see how it was formed using the TPO. So we started off at the open here. We had our initial balance there, and then we went up over the top of that range, out the bottom of that range, and then we came and settled here. We did a little bit of volume there. So this is where we built that part of the volume profile. Then price went into discovery. It pushed up, made a new high. This area here, it just flew through. And these are these sections here where we fly through these low volume sections. These are price discovery, where we're looking for an area where we can become happy about buying and selling again. And this is why it's quite often a good strategy to sell the lows for a quick scalp out the lows, but you're not going to get an awful lot, because what happens a lot of the time down here, we're outside of the value area. So the buyers step in and say, actually, no, we want to conduct business up here. And this is why the value areas are there. And then obviously we pushed up again. So this is the price discovery phase. Are we happy to trade here? Are we happy to trade here? And this is the point where everyone said, we're happy to trade. And then we got the volume profile built there. So this is a double distribution with a very slim bit in the middle. Short one. Does that answer your question? I don't know if that really answers your question. There's not really any one way of trading. This is my take on a swing, where we are right now. Whoops. So my bias this morning is short based on gap fills. So for me to swing today would be just to, because Globex is so slow, is to have a target somewhere down wherever your support was down there. But for me, my target from where we are here would probably be back down to point of control. So this is where I'd look to get out of the position down here. So I would actually scale in probably again there, one position. This would be my second position once we've run through this light volume area here, which is a break of that low. Add a position when we've confirmed that we can get through that level, which will bring my average up to about there. Happy to take a bit of heat on drawdown, but get out around the point of control today. So I've sold value area high, and I'm getting out when we get back into value, because I don't know when we get back into value whether or not we're going to push back up or down. There's no idea. I haven't got a clue. Nobody knows. But we know that buying outside of value, price will always try to get back into value. So what I'll be looking for then is, if this trade works out, I will wait and see what we do next. Whether we're going to push outside of value that way or that way. If we push down, then I would probably look to buy back into value at some point. But when the big boys step in and back up what I'm doing, I want to see tick strike go green. I want to see big buyers coming into the market. I want to see a level holding where there's a lot of activity. I want to see bubbles forming, which means there's high volume coming in at these areas and the sellers are taking control. So basically, all the buyers, we've got a lot of buyers coming in and price pushes down. That means these buyers are trapped. All these buyers here are trapped. They tried to push it long, couldn't do so. Push back down. As market moves down, they will become sellers to exit their positions, which adds to the strength of the down move. So this guy here puked at 60. So he got in at 60, didn't work out. Price has pushed down, he will exit his positions because he's trying to go long and it's not. So he'll get out down there, he becomes a seller. So those 50 contracts that went long suddenly turn into 50 contracts short, which will be sort of in here somewhere in that lot. But as I said this before, you can't teach a strategy in futures. It's very difficult. There's lots of ways to trade. Selling the value areas, buying the value areas. They'll work some days, other days they won't. Buying and selling breakouts. I'm really good at buying and selling breakouts. So I will buy there and I will buy there if the breakout happens. So one or two things happens at highs. You either get to them and you get a big order come in which holds the market at the high and then it collapses, in which case then I'll stop out on that position, or it pops and then you get added another position and you'll move up 8, 10, maybe 16 ticks if you're lucky, and get out on a quick scalp. And then I'll wait for it to come back and reset and rinse and repeat. And on a trend day, I will absolutely destroy the market. I'll pull 3 or 4K out of the market, no problem. I don't know if it's going to be a trend day or a rotation day. I haven't got a clue. The only way I'll know that is about an hour and a half in, but by then it's too late. And this is what I was saying about this bell curve you have. Innovators are the ones that start the market moves. These are the ones that make the most money. Then you've got the early adopters, who are the ones that identify that we're probably going into a trend day. They'll take a risk on every breakout and they will make a lot of money. And then you get the rest of us, who by the time we've identified it's a trend day, we can only really grab that much out of the market, and then the trend's usually over. And then you've got the laggers who try and get in at the end and they just get chopped to death. There is no strategy really, because you don't know which way it's going any day. But support and resistance personally, I find value areas, points of control, and obviously previous days highs and lows are key, and previous session highs and lows as well. So this is the New York session, this is the Globex session, this is the Globex session that we're in now. Thefye. Sorry, I can't say your name. Do you still use the breakout trade feature of your Price Action EA? Can you demonstrate its use on one of the live sessions? Breakout trade feature on the Price Action EA, Price Action Toolkit. Yeah. I mean, I've moved more over into futures, but the process is the same, really. Yeah, the Price Action Toolkit I use in very much the same way. So where we are, I'm not going to get in one now, but last candle. So here, for example, if I'm looking for a sell, put a sell stop under the low, stop above the high of the previous candle in this case. Yeah, and wait to get in short. So if price pulls up now, yeah, I will basically cancel those orders and re-put my sell stop under the lows. So if I'm expecting it to go short, I will keep cancelling off these orders, or I'd probably just drag them rather than cancel them, and then look for breaks down as we're pulling back. So you've got to think whenever you're trading anything, you've got to forget about what's here to a certain extent. What's happened in the past has got nothing to do with what's going to happen today. Yeah, FOMC this evening at 7:30. There's nothing here that could ever give you any indication as to whether the market's going to go absolutely mental or just go sideways at 7:30 this evening. Haven't got a clue. Nothing can tell you that. So you've got to think, right, when I'm getting into a trade now, what's happening? How good is the market at getting to where it's going? Where do I think it's going? So for me at the moment, I think it's coming down to do this gap fill. What's confirming it for me? We've pushed up to a high, a low, a lower high. So I'm expecting a lower low. So what do I want to be at the moment? I want to be a seller. Yeah. So where should be a good place to sell? Well, I don't want to sell as it's pushing down, because what happens after a push? We have a profit taken, price pulls back. So I want to be selling as price pulls back. So the best thing to do is put a sell stop underneath this low, and if price now sits and accumulates, it's going to break. When it breaks that low, I want to be short. Yeah. If it pulls back to here, and then the next candle is like that, and the next candle is like that, I'm going to move this sell order underneath the lows of those candles, because the next bearish engulfing we get is probably going to be the start of that leg down. So you've got to think, where are we going? How is best for me to get in right now? You've got to be thinking ahead, and it's the same in the futures. If you're long now, this is exactly where you want to get in. You want to get in long now because we've just had a long wick put in. So we've pushed down, we've tested that low, we've double bottomed, we've got a long wick. That's a bullish candle. So you've seen that candle painted. We're now pulling back. So if you want to get in long now, what you want to be doing is going with a buy stop above this high, so that when price mucks about in here and the next bullish move happens, you get gathered in with it. So if you're long, you'll be looking, where are we going? Maybe up to take out yesterday's high. You've got to be thinking, where are we going? And how good a job are we doing of actually getting there at the moment? Yeah, the minute market's not really doing a very good job of going anywhere, is it? We're actually contracting at the minute. Ready for an explosion. So, but yeah, that's how I use this. And then I will add into positions as we go. So right now, if I'm short now, I've got two things I can do. Just in case this triggers. So I'm going to put a stop above this candle's high. So I'm going to go with a sell stop there. And if I'm right, I want to sell stop under the lows. So what I'm going to do is get in when we break here, and I'm going to add a position when we break that low. So I'm in there, and I've got another one in there. Yep. So that's how I trade with it. Just making sure, yeah, it's a tiny loss. It's point. I just put a 0.1 on it. I do actually quite like this trade, but I think it might be a little bit early on it, but we'll see. But that's how I use it, and that's why I built it, because there's nothing, I couldn't find anything out there that allows you to do this from a scalping perspective. You know, I don't want to get in, I don't want to hit the buy and sell at market. I want to get in when price is telling me, yeah, I'm going my way. And that's by letting price move down and pull back. Right, if it does that again and breaks that low, I want to go with it. And this is what these buttons allow you to do. So if we break this low here, I want to add, because it's confirming my move and we're pushing down. So I'm in, and I want to get in more because I'm going to add to position that's going my way. A session breakdown feature. I don't know what a session breakdown feature is. A breakout feature. It hasn't got a session breakout feature. It's got an opening range breakout. So the EA draws in the opening range high and the opening range low. At the moment, mine's set to 1 minute rather than 5 minutes. So if I flick down to a 1 minute chart, yeah. So there's your 1 minute opening range. So this is your opening range there. So there's an opening range breakout feature, yeah. So it will take an opening range breakout long. So when we close outside that opening range, it will enter short with a stop above the opening range high and whatever TP you've got set. It will only take one though. It will go long. It would have gone long up there and you'd have stopped out there, and it would have taken you short there and you'd have made a profit on that one. That's how the opening range breakout works. And you've also got the 1.5. There's two opening ranges in there. You can set them to whatever you want. Yeah, so 1 minute opening ranges I'm using, and then 1.5 hour opening ranges. And obviously you set that to auto trade down here. So trade, there you go. So take Frankfurt initial opening range breakout, take New York range breakout, take the second breakout. So you could set them to whatever you want them to be. That's just cost me $50 to demonstrate that to you. You better go and buy it now and give me my $50 back. Anyway, I'm just going to take that pending off. Stop out. Does that explain it? I think it's difficult to put a stop loss order in futures. They get hit easily. Even 20 tick stop is dicey. Yes. Yeah. Oil's pushing up. Nothing else is going anywhere at the minute. Yeah, I mean, it is. You've got to pick your levels, basically. So what I do is I have a 16 stop runner set on ES. So every time I basically put a pending order in, it sets a 16 tick stop for me. But I move that to where I want it to be. So I'm going to sit behind that order in a minute. The best place for this is probably going to be up there behind this order, because this is a more static order. Likely that's not going to get pulled. So I would expect them to potentially add to their offers and just push price back down again. Breaking of the high. Don't forget, there's two types of breakouts. We have the breakouts which pop, and then we have the breakouts which break out and don't go anywhere. Those tend to fail. So being a few ticks above where I am, sort of 8 ticks above the high of the session, is, if you get a false breakout, is a good place to be protected. If you want to get tight, go in there. But I would say if it's going to break this, and we're going to put some volume, we've put 13 contracts in here. If we break that, there's no point in putting it there or there, really. They're both going to get hit because this is going to pop. There you go. Bang. That's what happens. That's an opening range breakout trade. So you place your pending order there and you take 8, 10 ticks, 16 if you're lucky. There you would have been lucky. That was a lucky one. But look how much it took to get through there, contract-wise. A lot of buying needed to get through that level. That's an opening range break. See, now we're back up and look at what we've got coming up here. Previous point of control. And look at where we've stopped. Exactly to the tick. Yeah, it's not a coincidence. To the tick. Previous session point of control. Yeah. So if you're going to sell now, right now, you can hit the sell button now or put an order there. Stop just above the TPO point of control. And if the point of control is going to be honoured and we're going to move back down into value today, that's a hell of a trade. Look at the risk reward on that. That's what it's about, waiting for these setups. But you're trading against the trend. This is a mean reversion strategy. There's two types. There is only two types of strategy in trading. There's mean reversion and there's breakouts. Yeah. So the breakout traders, which is what I am usually in New York for the first sort of half an hour. The breakout traders made a nice little profit there. The mean reversion traders are now in with a very high risk reward opportunity. Yeah, so hit the bid there. Yeah. So TP on this one would be back down there. That's it. Yeah, I'm willing to risk 137.50 to make 360 T50. You need to decide whether you're a mean reversion trader or a trend trader at any point in the day, and that will change depending on what's happening. If I'm seeing breakout, pullback, breakout, next pullback, I'm going to break out with it because it looks like we're in a trend day. If I'm seeing every breakout fade back into value, I'm going to fade the next breakout into value. You just got to go with, and this is why, you know, my P&L, I have buy, sell. I've posted it in the group before. Buy, sell, buy, sell, buy, sell. I'm trading both directions because you can. If you want to scalp $100 out the market right now, you can do it. You can go with a one-to-one. If you've got more than a 50% on one-to-ones, you're making money. Your breakout trades, you need you can go with a very tight stop on a breakout trade, a 4-tick stop on a breakout trade. Well, no, that's a bit tight. I would go sort of 6, 8. I like 8 on a breakout, but 8 ticks on a breakout will easily. You can usually get 8 ticks, 10 ticks on a breakout, as you just saw that one there. Look, we made. Where was it? So the breakout was 63.75. We moved up to 68.50. So it's good 20 ticks there. But they're all very different strategies. So this one, that stop should really be 39.69.25. So yeah, 75. You see someone's doing the same here, exactly the same. Look at that order there. Yeah, that's sitting at 39.70, which is up there. So they're sitting above the TPO point of control from the previous day, from the day before, assuming that if this volume profile point of control doesn't hold, the TPO one may hold, because there's limit orders sitting there. So they sit behind it, and it will literally just hit and go, as it did exactly there. It's not like Forex. Every now and again we get something hit to the tick. In futures, you do hit to the tick because there's a lot of algos sitting there with limit orders on these levels. They're looking to play them. It's a strategy that they play. You see all these buyers that came through here. Either that is sellers coming in now, is these buyers taking profit because we haven't made any progress. Don't forget, if you're buying here, you want to see price move up. Price isn't moving up. So these buyers will be going, actually, I'm not sure here. And if price moves back down to here, all these buyers are going to be trapped in a long position with a loss. So what do? Exit the position with a loss. What happens? They become sellers. What happens to price? It drops back down fast. Where to? Potentially where we broke out of last time, and that will either become a support that will hold, or it will be support that will break and will pull back down into value. There's only a certain amount of things that will ever happen, and this is why you need to do drills in futures. If you watch this for a week, you will see exactly the same things happening over and over again. You will see a breakout that will go like that and then pop. You will see a breakout that will go like that and it will fail. You will see a breakout that will just collapse straight away. One of those three things will happen every single breakout, and it will pull back and support will hold, or it will push back into value. So there's plays there, isn't there? On a breakout, you can play the breakout long and scalp it. You can wait and see what happens after the breakout, and if it pulls back, you can buy the pullback into the step here. Buy that, assuming that we're going to get support hold, this level. Yeah. Or you can sell and fade the breakout, assuming we're going to get back down into value. It's three plays. It's not rocket science. That is literally what happens in the futures market over and over and over again. Where you get chopped up and where you lose money is where you just get it wrong again and again. And this is what happened to me yesterday. I knew it was coming. Well, I didn't know it was coming down. I thought it was coming down. My bias was short. I just got the wrong play at the wrong time too many times. Other days, I've had 100% strike rate days where I've bought every breakout and every breakout's popped. And I've done that 6 times or 7 times or 8 times, and I've sat there and gone, Jesus, that was easy, wasn't it? 1,600 quid, I'm going home. Well, I live at home. I work at home, so I didn't go home, I just stopped trading. But that's it. There's not many plays you can make in this market. You can see what it does. It breaks out. Support either holds and it breaks out again, or it fails. Support holds. Yeah, but that's a push out of value and a pullback into value. Look, value area pushed out, outside of value, pulled back into value, broke out of value. What are we going to do? We're going to pull back into value now, we're going to pull back into support now, or are we just going to accumulate and break? There's only 3 things that can happen. You just got to try and look at price action, look at what's happened so far today, and look at what's happening. There's a lot of sellers entering the market up here. Are we moving down? No. So it's a difficult one. Is this trade working? No. Do you want to get out of it? Yeah. If it's sat here for a few minutes and I've not gone anywhere, I'll probably scratch it. But this is where it doesn't work in the Globex session, because the Globex session's so slow, you just get bored into taking trades. In New York, this will have happened by now. or this will have happened by now, or that will have happened by now. 2 minutes, in, out, 3 minutes maybe. If we're having a slow session, I might have to wait 5 minutes for a trade to play out, but 9 times out of 10 I'm in and out, and 20 seconds, 50 seconds, those sorts of times are on trades. But that's the scalping. If you want to swing it, and this is why I don't swing, you can get taken out very easily trying to swing, and you've got to kind of be right on your bias. If you're wrong on your bias and that isn't going to happen, that swing trade's not going to work. You're just going to lose, and you're only going to have 1 crack or 2 cracks at the day. And if you're wrong, you don't make any money. Whereas with scalping, you're in and out, and in and out, and in and out. You really only need 5 trades a day. If you can get those 5 trades at the New York Open, and you just get the breakout bias right, and it happens to be a trend day, and you've taken every breakout, you're done. You know, it's just, but that's the bit that escapes people, is there's not much you can do in futures, is there? You've got this ladder. Yeah? It's going to go up and down. Where's it going to stop? I don't know. Let's have a look at where we stopped and broken out from previously. Let's have a look at where the majority of people are happy to trade. Yeah, so this area here, 63s, if we get down to there, I'll pull my stop down, and I'll either have a risk-free trade and I'll get my value area, or I won't. Makes sense? That's the way I read it anyway. And obviously you've got loads of clues, yeah? Deltas, look at Delta. I mean, you want to be a buyer at the minute. You want to be a buyer, definitely. So I would say the breakout plays at the moment are the thing to do. But you've got to look at where you're going. And this is why I have a 30-minute chart. I'm looking for potential areas of resistance, and I'm looking for previous points of control and value areas as potentially where I can get to. There we go, so we're down at 63s. So cover my commission. I'm either going to get stopped out on a pullback, or we're going to hit the value area. But this is where, like you were just saying, it's difficult to position your stops. There's high probability of it doing that, isn't there? That's what market structure is. And this is why break-even stops quite often get taken out, because the market moves in cycles and waves. So, you know, that's the safest stop now. It's a little bit reduced risk. I was up here, so I've reduced my risk to 125. If you want to be super aggressive, and again, this will depend on how I'm doing in the day. If I'm up $1,200 today, yeah, I don't really want to take a loss. So my stop will be more break even. If, like I am at the moment today, I'm $500 down, I'll have a bit more risk on the table, because this one trade here is going to get back 3/4 of my losses so far this morning. So what time frame would you recommend for scalping without access to Jigsaw? I'd wear either 1 minute or 5 minute, really. I think. I mean, that's the typical scalping time frames. I normally scalp M5 because it's M1 I find a little bit too many false signals with candles, because you're trading candlestick patterns. See, this is the thing you don't see under the candlesticks, right? This is where I would expect a candlestick to pull back to. Yeah, M5 right now. You can see the volume here. We've stepped over that volume. So price has actually had, you know, enough momentum to make it back into that volume. Whether that gets rejected now, it will fly. Don't forget, remember those 3 types of trades, yeah? What's everybody that is now a trend trader today buying the pullbacks doing right here? They're adding buys. Yeah. So right here is a key area, because they're either buying the pullback, and it really depends how strong these sellers are here as to whether or not as we pull back, they will stomp on all these buyers that are buying here. And this is why you're going to see a load of buy volume come in and a load of sell volume come in. And this tells me at the moment the sellers are in control. Delta is telling me that the sellers are in control. But that can change at any point. Someone coming in here now and dropping 350 contract longs in, the buyers are going to take control, aren't they? If we've got anybody that's trading 50s. But so I would say the buyers have lucked out. Anybody that's bought there is probably going to exit their positions in a minute, and that's going to add selling pressure, which will move us back down into value area. And then we will decide on this big volume cluster here whether or not we're going to rotate that cluster and have another crack at the highs, or whether that cluster is going to fail and we're going to roll down back to point of control, where you can see there's a load of people waiting to buy. That's all. That's what's going to happen. That is what happens over and over and over again. And like with any trading, you don't know which of them is going to happen. The scenarios are going to happen. Like I keep saying, and I say in the bootcamp all the time, we know three things. It's going to move up, it's going to move down, and it's going to move through time. Futures is no different. The difference in futures is I can see where it's likely to go a lot clearer than I can with a candlestick. And why. I can see exactly why that turned there, because that was an area that we had control on a previous day. There were limit orders ready to dump. But on a candlestick chart, yeah, you can't see anything. There's no support and resistance there whatsoever. But on that day, there was a point of control there. Just a different view, isn't it? It's the same thing. You're taking a shot, long or short, based on a theory, and the most important thing is the risk reward at the end of the day. You either go with a 1-to-1 and hit a 50% plus strike rate, or go with a positive risk reward, and don't go with a nutty one. You know, this is the other thing people try, and that's kind of why I don't swing. I'm sitting on $200 profit now. If you're swinging this now, you could sit here for an hour and a half and it come up and just take out that. Whereas I can bank 200, move up, bank 200, move up, bank 200, move up, and have $600 while you're waiting for your swing to get you down to here. And that's what you've got to do to get $600, get down to point of control. It's a lot more difficult to make long trades in futures, swing trades. But obviously scaling into swings is something else you can do as well. So I just want to I've got another account trading micros, which I'm just going to add some more contracts to. So yeah, swinging, I just find it very difficult. A lot of people do it very, very well. But I think with a swing trade, you've got to have a very strong bias. And the problem this week is obviously this week we've got complete chaos because of stock earnings releases. So your bias isn't really based on anything technical or any levels. If if we said, right, that's where I'm expecting to go short today, and suddenly Amazon stock comes out as massively bullish, there's no level in the world that's going to stop the mountain of people that are going to buy Amazon. So kind of levels technically go out of the window a little bit when you were in earnings fortnight. The crazy weeks. So we're just rotating there, so I'm just going to close that, flatten it, take the 200. We are chopping at the moment and building volume here. So there's a danger that we build this out into a volume cluster and then we break and run, i.e. the pullback trade. I'm expecting a couple of green ticks, and there you go. Timing. I'm expecting a couple of green ticks to start to come in, as that did then, because what's happening here is the sellers are seeing support holding. There's a lot of buyers stepping in and absorbing those sell orders at the moment, and like me, the sellers will be going, doesn't look like we're going to crack this level, and they'll get out, and as they get out they become buyers. So you've got people already buying down here because they're absorbing all the sellers, and then you've got all the sellers becoming buyers as well because they're getting out of their positions, which causes the next run to start. So here, if you've got a long bias, we're still bearish on Delta at the minute, but if you've got a long bias, potential play is that and that. So if this holds, this cluster, as we start to come out of volume, we will get into these thin sections and we'll get a little bit of a flurry through, add one position, and then we'll see if we build volume there. If we don't build volume there, we're going to spit out the top, we're going to get the next breakout. 1, 2, profit. But it's all based on, you know, this volume profile will either rotate all day, and this is what Globex typically does. Globex is very rotational a lot of the time, rather than trend based. So this is why selling the value area high and getting back down into value is a good strategy, but it takes ages. I had a 5.5 hour trade on yesterday morning. Was it yesterday morning or the morning before? I can't remember, I put it in the group, but I had a 5.5 hour trade because I had exactly the right trade and exactly the right idea at exactly the right time. It's just this thing took 5.5 hours to get there, and I got out just before the New York Open. And this is why I don't like trading Globex, because it just takes forever. But you'll get these little pops and you'll be able to make $100, $200 at a time, $300 maybe, if you can sit through it. But it's very, very choppy. But you can see what, you can see what the market's doing at the moment. Market structure. Bias should be long. Delta is massively long. Just pushed up on 5,500 contracts. We pushed up on 9, pulled back on 6. It's bullish. Ticks coming in long. Waiting for some bias to support price. That's the way I look at it anyway. And I've done a few sessions like this before on volume profile. There's a lot of things to look at. And also you can see at the moment we've got these guys moving pretty much in sync as well. So this is the Dow and this is the Nasdaq. And obviously this is the S&P. So everything's kind of in sync at the minute. But yesterday the Dow was up like that, the Nas was like that, and the ES was all over the place. It was a mess. But normally you'll see one of these guys go first as well. So you'll have Delta suddenly spike down as it has on the Dow, and then the Nasdaq will pop. The ES won't have moved yet, so you sell the ES quickly because the ES will get dragged behind these guys. So there's a confluence play. There's all sorts of stuff you can do in futures, but at the end of the day, all you're seeing is order flow. You're seeing where everybody's positioned. You're seeing what's going on. Your job is to decide whether or not the buyers or the sellers are going to win out. And if you see a whacking great load of buy orders come in just before we're at a breakout point, you can hit that button fast and get on that break. Some people just play momentum. And there's nothing wrong with it. There is no one way of trading. You teach 10 people the same strategy, you get 10 completely different results. But it's not really a strategy. You're trading momentum with what the big guys are doing, basically. And that's why I say this I have set to 10:30 reconstructed tape. So this is the tape. I have it set to 10:30 during Globex, when I trade Globex. Either 30.50 or 5100, depending on the volatility during the New York session. So some New York sessions are quite low volume. Then I have it set to 30.50. So 30 will put an order here. A 50 will highlight it as a large order. If it's a high volume session, I will say I only want to see 50 contract orders, and I want you to highlight 100 contract orders. So these are the big boys. Yeah, nobody in retail is trading 50 hundreds. Some people in retail are trading 10s and 30s though. Not in the ES as much, but so I just adjust that depending on session. And there's no right or wrong. Some days you need it bigger than others. So looking for a little slip. A new market structure to put in a new high and come back up and retest. Point of control. But again, a lot of people are sitting up here right now selling back into there, and again it completely depends on you. 27 contracts just come in, tick strikes lighting up, looks long. Delta, still short. See, deltas are going against me at the moment. There's way more selling pressure from a volume perspective at the minute, but I want to see delta tick up now. Just going to change this to 1 minute and see if we've so I'm looking for delta now to show me that the buyers are on side. They're not. Look, the sellers are on side. Big buy orders just come in at 64 right here. But again, we're not going anywhere, are we? Sellers are in control. 169 contracts traded short and only 122 traded long so far since I entered this position. So there's way more sellers in the market at the minute than there are buyers. Delta's down, which means the sellers are in control. We've had a big buy order come in and we haven't ticked up, we've ticked down. So it's not looking good. So I'm just going to reduce risk on it. Sit behind that little node there. See if we get some buyers come out of there, but don't like it long, so reduce risk. Delta's still negative. Delta's also negative on the Dow. Nasdaq's flatlined. What do you think about trading bonds? I've been trading ZB on Ninja recently. Quite like it. Yeah, very slow, Christy. A lot of people trade bonds. The 5 year, the 10 years, the 2 year. Yeah, it's a totally different style of trading. You're ticking incredibly slowly. So it's kind of large contracts grabbing 2 to 4 ticks out the market at a time. I just haven't tried it. So I don't know if it's for me or not. I've never really put in the time to actually try trading it. But yeah, a lot of people trade them in confluence with each other as well. They move in tandem as well. All the bonds move at the same time. So you quite often, you can use a confluence strategy with it, as far as I understand, a lot of people do. So it'd be the same as trading the Dow, the Nasdaq and the ES. You'll see the 2 year bond shoot up, the 5 year will shoot up, the 10 hasn't gone yet, so you take a long on the 10 and you grab 3 ticks out of it with 5 or 10 contracts in and out. $200 to $300 or more, whatever you want to do with it. Basically, it depends on your account size, obviously. But yeah, and there's also, you can see this column here, which is the bids that are being pulled and added. So at the moment we've got 26 added to the offer, 12 added to the offer. So there's people adding sell orders in. Got 31 added to the bid there, so there's people adding bids in at the moment. Obviously this is the ES, which this doesn't mean anything on the ES. It happens too quick. But on the bonds, you will see all of a sudden a large amount of orders get added to the bid and a large amount of orders get subtracted from the offer. When that happens, you tend to tick up. One tick is worth what, 37.50 in the 2 year? You know, one tick with one contract is worth a decent amount of money. So if you can scalp 2 contracts out when you see people adding to the bid, you're just waiting for that double tick up, you're out. So I think that's how a lot of people trade it. But again, I think New York Open really is the only time you get enough coming through. And on those, you're sitting watching sort of 1,000. Let me just get one up. Why? No, it's not a Z, isn't it? Z. Let's go. Oh, wrong one. Sorry, one sec. Just getting depth of sales up. I'm not sure I've got the right contract on this, but so that's ZB. You know, you're sitting here looking at hundreds on the bid and the offer, rather than tens. And this is what I mean. So this column here, you're getting. You saw there was a minus 11. So you're getting 30. You're getting 30 contracts added to the offer, 15 added, 20 added, 40 added to the bid. When you see a large amount being added to one side or the other and a large amount being subtracted from one side or the other, that's a precursor usually to a tick up or down. But you see how much this has moved, look. Yeah, compared to very, very what they call thick markets. So 141 added to the offer, and they're pulling from there. Just stopped out on that ES. It's a little loss. But yeah, I mean, they're different markets. So we're adding to the offer here, so I'd expect this to tick up. We're pulling the offer, we're adding to the bid, so I'd expect to tick up. There we go. 142.07. If that continues to add to the bid and pull the offer, we'll tick up again to 142.08. There we go, ticked up. So you can see when buyers are stepping in. All the time the sellers are pulling their orders and the buyers are adding to their orders, it's going to add pressure to the upside. All the time it's going the other way, it's going to add pressure to the downside. But you take 2 or 3 ticks out of this, it's a decent amount of money. But very, very slow. Yeah, breakouts on this. Look how this is a breakout happening at the minute. Fast, isn't it? No, I just can't. I can't watch it. It just takes too long for me. Decent order just come in there. going to close my short out. Right, so that's really it. Just gone off onto a tangent on futures for a little bit. It's always nice to do. Movement up on oil. Not much, but we are going the right way on oil. Everything else is just staying where it is. Nothing's moved today so far. So, like I said, it's FOMC. We may well get some movement ahead of the announcement, but most of the time we tend to get a fairly flat session for US and for London. But they will quite often pull and push, or pull and push, but we will usually stay somewhere around where we were at the Asian session close. So expect a bit of whipsawing up and down, but not a lot else really today. Okay, so that's all for today. Good luck this evening in FOMC. I will post when I get back from my class. My class is at 6:30, so it's 7 o'clock FOMC. And then the press conference. So that's quite often the press conferences where if this doesn't move it, this quite often will. So, or if this moves it and not particularly far, this will quite often unmove it. So just be aware that for that whole sort of hour from 7 until 8 this evening, you'll get volatility potentially in both directions, whipsaws, stop hunts, both-sided, double-sided stop hunts. All sorts of stuff goes on around FOMC quite often. So, but I will. I'll post. Obviously, you've seen the targets I've set. I will post what's gone on with my trades before FOMC as well. Anything that I have in profit before FOMC, not that because that's break even, but anything that's kind of anything over sort of 0.1% profit, I will typically bank it and put it there, because if FOMC goes against me on any positions, I'm not going to lose that money, and I'm not going to go into drawdown on that money. If it goes my way, this is going to reduce my drawdown. So it's a win-win situation. You may as well bank it. Yes, I would have made more money if it goes my way and I'd left it on, but you're a risk manager. So it's riskier to leave it on than it is to put it in your bank. So anything I've got in profit, sort of really, for me, a guideline is this account size is kind of over sort of $50 or so. Anything that's got $50 roughly or so, I will take off, which is around about 0.12% for me. So yeah, you see $65 is 0.17, so somewhere around $50. So just take off what you've got, just in case, because it's much better for you not to go into drawdown with that position, because you can add it on again. Yeah, if oil tanks, I'll just show you an example. So let's say we're up here when at 6 o'clock this evening. So I'll bank that position. Yeah, take that profit. If oil comes down, yeah, I can add that position back on again, can't I? So I've taken the profit, and then I get the option to take the profit twice. If it flies up, not a problem. We're going to get this position having its drawdown reduced. Yes, I could have made money on that, but I'd much rather... I've got a 50-50 shot, haven't I, at the end of the day, of either going into drawdown or it going my way. Yeah, so just take it. And don't kick yourself if it goes your way. Look at your P&L and go, I've got green today. That's what we're after, isn't it? Building the bank. Because then we can look after anything that goes into drawdown with the profits that we've built. Okay, so that's it. Watch out for that this evening. Anything else you need, let me know. I'll be back tomorrow, 7:50 stroke 8 o'clock, because again, I've got a spin class tomorrow morning at 6:30, 6:45. And anything else I take today, I will put in the Telegram group, but there's nothing much I'm interested in that I'm not already in at the moment. I'm very exposed across where I want to be, apart from potentially having some euro on, but nothing's pulling back. So it's unlikely I'll get in anything else today, but I will have a full whiz through at lunchtime before the New York Open And if there's anything I see, I'll post it in the Telegram group if I'm going to take anything. But good luck this evening. All right. Anything you need, let me know. If you want any futures stuff, discussions, there is a futures group now, which is linked from the Telegram group. So you can pop into the futures room and talk futures as well. But good luck, and I will see you guys tomorrow morning.